Welcome to DeFi by Design, where we talk all things blockchain and cryptocurrency while striving to educate, empower, and enrich.
It's your boy Andy, and welcome back to the DeFi Slate YouTube channel. Smash the like button on this video, that really helps us out, and sit back and enjoy the content. Thank you very much. What's going on, guys? Welcome back to the DeFi Slate YouTube channel. Here today to talk about what is going on in the world of money markets in DeFi. So we'd be happy to touch on and explain to you all kind of where we got the concept of lending and borrowing from, kind of where we're pushing this forward, and what our friend Garry here is building. Of course, here today with Rob, talking about DeFi. Rob, good morning. As your shirt says, GM, sir.
Morning, sir. Good
GM.
morning, GM, guys. Yeah, actually, I was listening to a podcast, the 𝗵𝗶𝗶𝗵 -Horowitz one with Bankless just a couple days ago, and one of the points 𝗵𝗶𝗶𝗵 hit on was like such a fundamental aspect of like capitalism was like the right to land, like the title to land, kind of just opened up this new world economy where you could start to borrow off of that land, and without that title, without that deed, you really like you had no claim to your property. So it's really interesting seeing this evolve into like an on-chain world where now there is, you know, the right to ownership. You have tokenized ownership on chain, and it's creating all of these composable types of protocols like money markets where you can borrow off of that and then, you know, build out a more robust economy. So yeah, Garry, I know you're a seasoned veteran when it comes to this stuff, so I'm stoked to hear about your mental model when it comes to these money markets. And then, of course, what's going on at 𝗶𝗶𝗃. So
yeah, sure. Thanks. First of all, Rob and Andy, to have me back on. It's a pleasure. Big fans, and the whole team are big fans of what you guys do. And yeah, happy to see you still here, surviving the storm that we're currently in. And yeah, it's those are exciting times because everything that has happened, not just in the last couple of weeks, but I think also in the last couple of months, has shown us that we need something more solidified, or maybe something that is more battle tested / trustworthy in a trustless way, one might say. So something that is still in its core very decentralized and permissionless and trustless. Nonetheless, that gives you clear indication of how risky it is what you're doing here, and especially when it comes to money markets, which I think we can all agree is at its core, or is a core element of a lot of DeFi protocols. They wouldn't be able to function without efficient money markets, and this is basically where 𝗶𝗶𝗃 comes in. And from day one, building and setting up the architecture behind 𝗶𝗃, the first and foremost principle was how can this be as secure as it gets, maybe even more secure than the incumbents, and B, have it more, I guess, easier to understand what kind of risks you're entering in terms of also interest rate risk, because obviously when it comes to money markets, you have to understand that there are interest rates at play that can go in up as well as down, depending on different circumstance and different factors. And this is where we thought with 𝗶𝗶𝗃 we can really make a difference. And 𝗶𝗶𝗃 is basically a native money market to Polygon, because we generally believe we can support the broader Polygon DeFi ecosystem with what we've done here. And I think also Polygon is quite supportive of that idea. And we're very, very bullish on everything also they're doing with all the ZK technology and Polygon Edge and Supernets. I think most people are not even aware how deep that rabbit hole can go in the next quarters and years, given all those new technical innovations. And 𝗶𝗶𝗃 will be, at core, very, very deeply embedded into that.
Nice. What do you think about the concept of isolated pools in money markets, right now? Like that kind of came out with like Rari Capital and like Aave V3 did it. Like what's that about? Why?
Yeah, I
What do you
mean,
think?
it's something users ask for quite a lot. On OVX, we haven't started with isolated pools just yet. Usually, you do isolated pools for more volatile, risky tokens, right? So, for instance, if you would list something like ApeCoin or something new that is not really that is potentially quite hyped or just entered the market just recently, and you don't know how volatile that token can be or that asset, and you want to see how it goes. This is where an isolated market makes a lot of sense. Having said that, it will by definition most likely be more expensive and hence less user friendly. So we're in full support of that. We're not starting with isolated markets just yet. We have 6 essentially blue chips, so 3 stable coins and Bitcoin, Ethereum, and Matic. But that's definitely something on our roadmap.
And could you give us a?
Yeah, I was just curious because of the risk, as you were saying. Like, I just thought it was like, I don't know, it's an innovation in a step of the right direction of making the money market concept more solid.
Yeah, but at the end of the day, it all comes down to supply and demand, right? So you see with other money markets, sometimes they list tokens in an isolated way and almost no one is really keen on using that market. So at the end of the day, you also have to have a good sense of, what is it that users want? What is it that makes sense to put engineering effort in? And what does make sense also maybe from a broader ecosystem perspective? This is something we're looking at. So would this also make sense to support the Polygon ecosystem, given that we're so deeply embedded within that?
Yeah, the risk isolation is a trade-off, for capital efficiency, where like you said, it's a less user-friendly experience, but ultimately, like it prevents the pool that asset from systemically, putting the other pools at risk.
Right.
Could you give us an overview of what 𝗵𝗶𝗴𝗵 is, and maybe draw some similarities and differences between the other money markets that are on the market?
So at core, OVX is a new money market that is, as I said, deeply embedded within the Polygon ecosystem. So this is, I guess, one thing that distinguishes us a bit from others, because with quite a few other blockchains, also layer 2s, we see they have kind of a native money market, and we felt Polygon didn't really so much. I mean, there are some money markets on Polygon, but we got the sense also after talking to the Polygon team that there wasn't really one focusing specifically on that ecosystem. So that was one thing that we felt is needed. And second of all, a more sustainable way to pay out rewards, right? So when you pay out rewards for using a money market, you want to incentivize lending or you want to incentivize borrowing. There are different ways how to do that, and the most common way was just dump some governance token on the users, increase basically artificially the APY with that, and then they start using that, and then they start dumping that token. Your emission schedule goes haywire, and then essentially you end up with a token that is significantly lost a lot of its value just because you just used it for incentives and rewards. So we're a big fan of the V-tokenomic model, the way 𝗵 has shown us it can work, and this creates essentially a more sustainable way to reward users to use the platform, and creates essentially more positive feedback loop when it comes to what you can do then with the VE tokens that you get after locking the tokens that you received as a reward, and this also kind of increases competition between markets. So let's say there will be a DeFi protocol that really wants to boost their Bitcoin yield on OVX, whereas there's another one that wants to increase their yield on the ETH market. They would then start to compete against each other and try to influence voters, as we know it, as it's being called in the 𝗵 world, bribe voters to essentially boost one or the other yield, right? Because there will be a fixed emission schedule of the rewards on a daily basis, and then there will be voting for people once they lock their tokens that they receive as reward to receive VE tokens or vault escrow tokens to then basically influence the way rewards are being paid out and distributed. So this is I guess one other key distinction that we have from most other money markets. Another thing that we're very proud of is our dynamic interest rates and models that we embedding with OVIX. So essentially, when there's excess market volatility, like we've seen in the last couple of weeks, usually what happens, especially with borrow rates, they start going up. There's something known as a jump rate model, where there's a kink once the utilization hits a certain level, right? Meaning once too many people start borrowing and not enough people continuously deposit funds. So there's always enough liquidity to borrow. So usually when this utilization rate goes too high, the interest rates start increasing by a lot. So you might borrow, I don't know, USDC for 2% the 1 minute, and the next minute it goes up to as high as, let's say, 10%, right? And this is due to the fact that the interest rate models with most money markets are designed that way. So we redesigned actually that model, and we published a whole research paper on that, and you can find it on ovix.com under research, where basically we've shown how with excess market volatility, there are ways to kind of flatten that kink and essentially flatten the curve and have a more gradual increase in interest rates. And this is what we're going to do with OVIX, something no one has done really before, at least on a active money market. And other than that, and this is probably the most exciting thing that we're doing, we will be the first money market to support a lot of Polygon Edge chains or supernet chains, so blockchains that will run off the Polygon blockchain as a service solution, which is known as Polygon Edge Supernets. So this is very exciting. I can't share too many details on what great fintech companies or enterprise companies are joining those I guess those products, but it's definitely a way to bring essentially DeFi to the next couple of million users or new users around the globe. So we're very excited about that.
Cool. What exactly does it mean when you have a Polygon as a service or like a blockchain as a service?
So yeah, the way Polygon Edge or Supernets work, and they have a great website where we can read way more about that. But in its essence, it's basically a fully EVM compatible blockchain, which has like a modular architecture. So it can be POS or POA, it can be private or it can be public. Basically, you can transfer, ERC20, NFTs, or web currencies from the POS blockchain, which is the normal Polygon blockchain, to basically Polygon Edge, and you basically dock through a normal, JSON RPC, and essentially by that you can offer through this internal bridge, let's say, services from the POS chain to essentially Polygon Edge. And the way they build it, it's very easy to use to onboard enterprise and fintech type of business cases or companies to that chain. And I'm not too sure in detail how parachains work, but it goes a bit also into what parachains have been doing. And this is a really huge use case also for DeFi. So this will basically help a lot of new use cases to come up. And I think this will be a way where DeFi can or how DeFi can evolve.
Yeah. So Polygon Edge kind of rolls up. It has like a modular architecture, like you're saying, and then each of these modules roll up to the proof of stake Polygon chain, which in turn, goes and posts to the Ethereum main chain. Mm-hmm. When it comes to OVIX that operating on the POS chain.
Yeah.
What is the framework or design of the modular chains interacting with OVIX, which rests on the proof of stake chain? Obviously these other app specific side chains are, they're not on the POS chain. So what does that interaction look like? Is it really cross chain because they're on their own modular rollup and they're interacting with the POS chain? Could you just kind of lay out the design model of how a user on an app specific chain would interact with OVIX?
Sure. So first of all, it is multi-chain. We don't call it cross-chain because usually people understand something else with cross-chain, but we use the term multi-chain because essentially those are different chains, be it public or private chains, that basically are sitting next to the main Polygon POS chain. And when it comes from the user experience, so imagine some fintech, right? I don't want to use any names because actually some of them might be developing already those kind of solutions, but let's say some mobile banking app, wherever, right, wants to put part of their backend on the blockchain, right? And obviously building your own blockchain, there's tons of stuff you have to do. So with Polygon Edge and SuperNets, it's basically blockchain as a service solution, especially geared towards enterprise level customers or fintech customers. And part of that backend can be just put on this, let's say, private or even public chain. And let's call it ABC chain, right? They can call it whatever they want. So from a user perspective or end user perspective, they won't even realize there's Polygon working in the background. They will think they're interacting with that particular chain, right, of that app or that enterprise solution. And in the background, same as they won't really notice there's Polygon working in the back, they won't potentially even notice there's OVIX or any DeFi protocol for that matter working in the back, right? And so we call it, I guess, invisible tech. Because essentially you could then provide DeFi yields to non-DeFi customers, right? Without those, let's call them non-DeFi customers, even realizing those yields come from DeFi. I think this is really where I see a lot of potential coming up in the next months and years.
Right. Cool. So I'm still curious why you guys chose to go on Polygon and not like one of the other solutions, like a layer 2. Is it because is it the ties kind of like with GoGo, or is it the part of like what is, obviously we just touched on a lot of these, but I guess just briefly, like why not other layer 2s?
So I mean, yeah, we've been around for a while, seeing some blockchains doing well, others not so much. And I mean, at the end of the day, yeah, it's like it's you have to have some sort of conviction. But to be honest, lately it's not very hard to find arguments against, it's not very easy to find arguments against Polygon. Right, they've been delivering. They've been doing amazing work. They have amazing products, marketing. They have great business development. They know how to scale, and they're ready to scale. They have the tech to scale. They're very close to Ethereum, and essentially it's almost as secure as it can get, given the validation through the Ethereum chain. So there's not much you can really say against them, but yeah. This is just if you compare them on let's say a basic level. Once you dig deeper and you understand the ZK roadmap and the Polygon Edge and SuperNets roadmap, I mean, then it's almost impossible to really look at any other chain. And I don't say this because I don't know, I'm some Polygon maxi. Maybe you can call me a Polygon maxi, but at its core, I'm a maxi of scalability and usability and something that you can really use to bring in the next 100 million users. And I don't see many I guess, initiatives by the other chains to make that happen anytime soon, right? A lot of people are talking about that, but I don't see many chains. Maybe there are one, two others that really actually talk the talk and walk the walk, right? And they're a great team to work with, very easy to speak to. They've been around and very easy to work with. And I think, so there are a number of reasons.
Yeah, the evolution of kind of the modular chains is opening up, all these centralized companies to go and create their own permissioned blockchains just by, spinning off from one of these blockchain as a service providers. And it sounds like Polygon really has a good foothold in some of those, you mentioned the business development, there's not many arguments against it. So it's very easy for a company, like a centralized institution, to go and create their own blockchain, and then they can start to, whitelist their own users. They can, create their own validator set, and then ultimately roll up into a secure chain. And that design model, I think, was kind of pioneered by, Cosmos with their proof of stake hub, and then the app chains that kind of surround it. And there wasn't a lot of ZK like development happening on Cosmos, but Polygon is, kind of recreated that same model where it's very easy to spin up a side chain. And now they have the ZK implementation kind of following, in the wind, where it sounds like they're going to start to implement some of the ZK models where, these other permission chains can interact with the utmost scalability, and at the same time plug into the existing Ethereum framework. So, yeah, I'm curious, like, how does...
That's the kicker.
Yeah.
That's the kicker. The Ethereum kind of backstop makes it very attractive.
Absolutely.
Yeah. Rob, what are you curious about how you're going to get your next 100x on the money markets, or what's going on here?
I actually have an inclination that, like, these other app-specific chains, like, I wouldn't even be able to transact on. Like, I'm getting the sense a lot of them are going to be permissioned, and maybe like there's.
But for different use cases.
Exactly. Maybe that's my question to Garry. Is like, what are some of the use cases of these permission chains that we're not seeing on the open permissionless on-chain world right now?
Yeah, like, we're in the trenches, Garry. Like, what are some of the, like, what's going to bring some corporations in or something?
One use case, and that's kind of obvious, and given my background in fintech, I'm 100% convinced of that, is that anything that makes your backend work cheaper and can become, and at the same time more scalable, and at the same time support some Web3 or a blockchain use case that you might be developing. And I can tell you most fintech companies are already developing or strongly thinking about developing a blockchain use case. There won't be many ways to do that unless you either build your own blockchain or you partner up with a blockchain in a way where you use some sort of modular service. So be it deposits and loans, that's I guess an obvious use case, and this is directly connected then I guess to what we do in DeFi. Other than that, mass payments, remittance. I mean, I don't have to tell you that if you look at the bottom line cost, there's no cheaper way in the world to send mass amounts of funds essentially from one place to another than on the blockchain, right? And obviously there's still this issue of on-ramping and off-ramping, but I think this is just a temporary thing because there's way more crypto adoption all over the world. So actually some people are happy to receive crypto instead of fiat. And B, I think the events that we're seeing now unfolding in the world, I think on-ramping, off-ramping will be something that will just become in utility, like, I don't know, like PayPaling someone or I don't know. So,
You know how, like, in the last few cycles, it's been like ICOs and NFTs and DeFi. Like, do you think in the next cycle or two, if you will, like what we'll be buying tokens of is like businesses that are like kind of doing like these permission blockchains, or like businesses that have their token that are making clear money that's not necessarily in DeFi or NFTs, but perhaps as a I don't know, like a remittance service, or like a decentralized Uber. Like, I mean, that's like always thrown out there, but like, do you think we're headed towards like more business blockchain kind of collaborations, to where we're almost investing in like companies, but they're still like
100%,
kind of like, you know, like
100%. So
yeah.
I generally think almost all companies we know and love and like will create a token one way or the other. And this token might be an NFT. And as we know, tons of those companies are doing that as we speak, right? Like be it Adidas or some gaming company, etc. Whereas others will actually create a ERC20 token or something along those lines that can be used for rewards, for just, you know, engagement, trying to drive up engagement within their user base, or just actually create a token that represents some sort of value of that service or company or whatnot. So will this be the driver of the next wave or hype wave? I don't know, but I wouldn't be surprised if that would be the case. So from all the talks that we are having and all the partners that we're working with, I wouldn't be surprised that within the next 6 to 12 months there's a complete new wave of use cases coming up that people wouldn't even imagine that could happen. And and it will feel like a seamless transition. It won't feel like, oh, I have to rethink the way I use that service. Oh, I have to completely rethink the user interface or the user experience. People will think they still use their, let's call it quote unquote Web2 service, but actually part or all of it will run already on the blockchain.
Yeah.
And it seems like we had to conquer like the money aspect first. Like that's what everybody kind of has been building towards, and then NFTs kind of just shattered that kind of pre notion of like, all right, you need to focus on money. Like culture is almost like an easier thing to tap into. But I think like for your focus, like the fintech side, like taking fintech apps and integrating on the back end, like OVIX, lending and borrowing, yield through DeFi, that's probably like the most, I would say like those entities are probably going to get a lot of traction in the coming years, perhaps more so than like fully integrating like into everyday life. But like, I think we start to see those fintech apps, non-custodial perhaps, even, just really giving a different experience to money for people almost. And then one of them will probably hit it big in terms of like, be like everybody, your friends will have it without you telling them about it. And then that's,
I don't think just one of them. I think a number of them. Yeah.
Yeah. And, I don't know if this is Hopium or FUD. And you mentioned kind of like the next, 6 to 12 months, kind of like the permission blockchain, businesses that are launching a token, but they have maybe an off-chain business model that generates revenue for the token holders. Kind of extending that out, 12 months to maybe, 36. The Fed, I don't know if you want to call them a business or a nonprofit or, they have financial goals, whatever you want to call them. The CBDC, I think could be one of these permissioned like chains. And then all of the validator sets, could be, these banks that are interacting with the Fed on a daily basis. Like in the instance of like a CBDC, how does something like these side chains and maybe banks on these side chains plug into a money market like OVIX? Would it maybe look like the banks that are interacting with it, or the users, or the Fed? Just kind of maybe paint a little bit more around that picture, if you would.
Sure. So, CBDCs I think are a very special use case. Of course, it might become the biggest use case of them all. It might be something that is part of the transition of bringing fiat to the chain. It's really tough to say, and I'm just not. I don't feel too comfortable being exactly predicting where this is headed. What I do know, though, is traditional financial companies live in a fully regulated environment, and there are very good reasons for that. And I generally believe if they have to find ways, also talk to regulators to understand for more innovation to happen, they need to essentially create new rules and new legislation. And we're just, seeing we're still in the early days of that, because I definitely see a world where a non-custodial, fully decentralized protocol can be embedded in a centralized, regulated, custodial corporation, right? But for now, we're still experimenting at best, because most of those corporations, they're just too afraid to enter that space because it's uncharted territory. So I think this is where really legislation has to drive things, and people that are in corporations and CEOs that are interested in that, and decision makers need to basically stand up and raise their voice for this to happen faster. But this will definitely happen, and I think central banks might play a key role in that. But I think they have so many issues right now with rising interest rates and the global economy. I don't know if that's really on their mind right now, but I wouldn't be surprised if they're definitely spending way more resource on that than they ever have in the past.
It seemed like the regulation was injecting itself at kind of a token level and like treating each of these tokens as, potentially securities. And now with these permission chains, regulation might insert itself at the chain level where it requires maybe a KYC on each wallet and, so on and so forth. But like you're saying,
permission DeFi, huh?
Yeah. I mean, I guess that's DeFi, right? Is like permissioned blockchains.
I guess.
You gotta get out of the States ASAP.
One thing I'm worried about is, or I'm not worried, but something that has been a lot on my mind lately is how if people really care about decentralization as much as we in DeFi like to think. And the best example are all most CeFi solutions and any other centralized, I guess, crypto offerings.
Yeah, like stablecoins. Like stablecoins are like so inherently centralized. The good ones, like what is more risky, a stablecoin or like holding Bitcoin?
I think people love performance, and it's the positive consequences of decentralization that users appreciate. But is it's like the centralization risk is only a risk once it happens, and if it's not ongoing, it's not something that is a benefit to the system. It's just kind of like undercover, and it's just over time that it uncovers itself as a benefit to the overall sphere of users.
Garry, I've got a decentralized question that kind of builds off Rob's point there. There's obviously pros and cons to each stablecoin. This is obviously not any sort of financial advice, but like to you, which is riskier, DAI or USDC? Or which would you prefer to hold?
It's a good one.
Why?
I like both.
Me too.
Also, maybe due to the lack of options these days. I can just tell you from my very subjective perspective, which is definitely not advice and definitely not something that maybe someone else should use. But I kind of know the teams behind both of those projects, which gives me already something to relate to, even though MakerDAO is arguably one, if not the most decentralized DAO out there. There's still people making decisions and calling the shots behind that. and people that get things delegated to, etc. And having met those people, I know those guys know what they're talking about, and they have a strategy in place, and they have people that are very good at executing that strategy. So even though they are decentralized and there are processes in place to make decisions in the name of the DAO that one member of the DAO can't make on their own, I still feel, because there are still human beings behind that you can meet and shake their hand and talk to them and understand their reasoning. That's why it still gives me this trustworthiness, even though by design it shouldn't, right? And with Circle, yeah, it's like a private company, right? And they have also a governance process, etc. But inherently, they're led like normal business, I guess, with shareholders and stuff. So it's a tough one. I guess I'm happy to have both and not be overexposed in one or the other.
Yeah, you raise good points.
That's a tough one. I at heart,
so
I'm more leaning towards decentralization, of course.
Right, but it's tough. So, okay, so to your point then, which is more risky? Which would you rather hold? Again, not advice, Bitcoin or DAI? I know it's like it's kind of a silly
it's not
question
because we actually
Bitcoin's
had,
volatile. But like, think about like
we had a very similar discussion to that end in our team. Essentially, the way the treasury is managed and the treasury of the DAO obviously also makes some, or is supposed to make some profits, and we basically discussed, so what should be the profits be counted in? Should it be something like Bitcoin or a dollar dominated or dollar pegged stablecoin? And we do have Bitcoin maxis that say obviously Bitcoin, and then you don't have any foreign exchange risk, and others that just for them it's easier to I guess think in dollar terms, say let's do it in dollars. So it's really in terms of what kind of flavor you prefer. Me personally, I start understanding more how Bitcoin can become really an alternative to most of people's I guess funds in terms of the way they do accounting. So I definitely have friends that always transfer whatever they're thinking, let's say transfer their salary mentally into how much is it in Bitcoin, or this car costs so much in Bitcoin, or this laptop costs so and so many Bitcoins, and others don't. So it really comes down what you prefer. I still use dollar terms in my head, so I guess I would probably answer that question with going into something that is dollar denominated. But in 1 or 2 or 3 years time, I might give you a different answer to that question.
Yeah, and bear markets or like downturns, your brain automatically seeks away from fear to protect, which is dollar terms. And then in bull times, it's like Bitcoin times. Yeah, I mean, it's just an interesting dynamic, really. It's like, I mean, if stable coins can be like frozen by certain parties or lose peg and stuff, it's like, whoa, like, what you're getting when you sign up for Bitcoin. It's like you're getting a super volatile store of value that, I mean, you're somehow so convicted in. It's interesting to see the development, of course, because of USD, but more importantly, just seeing things happen and unfold about the risk of certain stablecoins. But it's always good to kind of get thought process going on, like, okay, like what are my convictions? What are my kind of ethos? And like, how do you kind of balance what you stand for and what you think will make the most money kind of in investing in crypto and whatnot? And there's probably a fine line.
It's kind of like denominating in USD is paying for convenience. Like, on a long enough time horizon, Bitcoin's always been in a bull market. Like, if the thesis continues, your store of value, like to maximize wealth, is going to be in Bitcoin, and then to to pay your expenses, to denominate and pay salaries. Like, most are still tracking those kinds of expenses in USD. So like, it's almost like a convenience factor.
But Gary's an ex-banker. He wasn't trading on big checks against Bitcoin back in 2017. You know what I'm saying? He doesn't have that.
I was definitely in the wrong situation, man. If my bank or wherever I was working would have had some exposure to crypto, man, I would start way earlier than I did. I came very late to the party because I was, first of all, burned my hands in the initial 17, or not the initial, but the 17-18 bull and bust cycle, boom and bust cycle, and then I kept on being skeptical again for until DeFi summer happened, which was already almost too late. So yeah, unfortunately, I wish I would have been.
Hey, it's all right, man. Yeah, don't we always stack
There's
the
still
stats?
time. Let's create our own bank on a ZK Polygon sidechain.
Exactly. That's what I'm talking about.
Oh man, Gary, it's been a pleasure. As we kind of wrap up, how can our community get involved with 𝗶𝗶𝗃? What do you guys got coming out?
Yeah, so first of all, make sure to join our Discord and Telegram and Twitter. We got tons of news to share in the coming weeks and months. We have a token coming up, but you will find more details on those channels about this. And last but not least, there will be a very exciting airdrop happening for the community, and make sure to join those channels to find out more on this, because I think it will be really an exciting journey starting very, very soon. So yeah, very, very excited. No matter what the market does, I mean, we're in here for the long game, and yeah, very, very yeah,
stuck,
exactly.
man.
I'm stuck with this. And I hope you guys also are going to continue the great work you do, because I think we need way more on this. And I would love to come on again to talk a bit more about ZK, because I think like when it's closer to being more easily implementable in the next coming months, I think there's something a lot of people would want to know more about. So I'm very excited about those developments.
Yeah, we're super excited about ZK as well, and Garry, it's always a pleasure. So, very, very excited about GoGo and 𝗶𝗶𝗃. And yeah, until next time.
Yeah, thank you guys. Really appreciate it.